Good afternoon. This is the Elliott Wave weekly update for gold, silver, and platinum being recorded on Sunday, May 11th at 1:30 p.m. Pacific Daylight Time. I am going to start here on gold, and I've had to rebuild my computer, which is why I missed last week, by the way, but not to present any excuses. I can't pull up my saved very long-term chart, which takes me back to the 1970s all the way up to today. But nonetheless, more importantly, I do want to go over where we are as this larger rally continues to unfold. So on an intermediate degree, we have intermediate 1 and 2 in, and that actually, intermediate wave 2 completed in December of 2015. So this intermediate third wave is 10 years underway. So this is a long-term rally in gold, and it has picked up steam basically off of the 2022 lows. And then again, and now it just seems to be in launch mode. And as we finish up a third wave on a minuet degree. So what I have is it keeps subdividing. And this part really subdivided several times. So I've cleaned it up once we reached the top of that 3. And I took off, I think, 2 or 3 additional extensions within the third. So in terms of a larger third wave, it is truly a third wave, according to Elliott. And it just continues to subdivide. So where are we within that? Well, we're still looking to complete the minute third wave. And then we'll get a 4 and a 5 once that's done to complete a minor third wave. And we get a 4 and a 5, and that'll complete the intermediate third wave. So we have quite a bit of upside still left. Now, what I want to kind of go into and explain here is that I'm going to bring it down, and I'm going to put it on our daily. Yeah, I can't. I got to put it on the 3-5 year. Yeah, that's good. So you can see here, if we just are going to be running our regular fibs that are going to be associated with these pullbacks, as the market continues to climb, the next degree, it's going to produce a larger, or the potential for a larger pullback, still within that larger rally phase. So because we have reached such heights, we broke 3,000, we broke 31, we broke 32, we broke 33, we broke 34. And as our fibs are being met, we likely should break 35 and then again 36 before we're likely going to complete with the minute third wave. So all things considered, gold continues to lead the way in terms of what's motivating it. And it continues right now to be the dollar. As the dollar was declining and dropped below 100, gold picked up the speed at which it was going to advance. I think that can happen again because I don't think gold's done. I don't think the dollar is finished going down. What else continues to kick it in as we're seeing U.S. Treasuries, particularly the long-term, the 30-year and the 10-year note, get sold. And there's things that are behind that. But if we just look at it on a technical basis, the interest rates sneaking back up is not the best thing for gold. The dollar being sold is what is supporting it. So, and again, what a little bit longer term, we have to consider gold in a deflationary period, gold in a recessionary period. I think we need to read up, and I will start presenting, because we're not declared in a recession yet. So, but we need to start taking a look at, well, what does gold do during those periods? What happens to gold? So I'm going to be doing a little bit of my own research there so I can bring that forward as the market continues to move. So right now, I've just put up the fibs for the fourth wave, the minuet fourth wave. Just regular, what we would expect would be a 38.2% retracement of this third wave, which really, now this is the thing, This is a third wave that began in February of 2024 and completed in April of 2025. So that takes in, it's just because it just never really pulled back. So it kept extending and moving higher. So what we do have, that was a pullback. But if I break this down as best I can, let me see how low I can get so we can see these. You can see that we have here how it's going up. There was support, and it fit it. And those were fourth waves inside of an extension going up. So I continue to look there, I look there, I look there. Now that's a little bit more, has more strength because it's larger, but it's coming into where 0.382 should be. So again, what we've done is we finished, and this, I believe, this we actually could say is an ABC down, but is it just wave A? And we have gaps and gaps on the way back up. And it just keeps getting more interesting. So what I need to make us all aware of, this could be the completion. We came into a small internal fourth wave. It held, that was the 3,200, it held. But if this is just going to be an A and a B, and we're going to look for a C wave down, which may be underway, and we're going to go from here to here and back up again. 100% is 3154. It would put in a new low below there, not even close to getting anywhere down close to where we're here, but it may be enough to put it higher. If indeed that this completed this minuet fourth wave, then we're starting to rally again. And I'm going to take this off, and we'd have to say 1, 2. So again, even in here, we should continue to find support at about 3,300, and then again at 3,225 down to 3,200. A break there does bring us in alignment for a move down to possibly 3070-ish, down to 2967. So we have these support levels, and I do anticipate that they are going to hold. What's going to create a downdraft? Profit taking. The fact that the dollar doesn't sink and continues to put in somewhat of a rally, and that will bring out some sellers in gold, and just a lot of, I think, options trading, all kinds of things. But I think the underlying tone remains more bullish. So that would suggest that we continue to, let me just bring it back out here. We continue to rally. So again, there's support, there's support, there's support, there's support, there's support. But here are 382 and our 50%. Fourth wave can go 50%. What it can't do is it cannot come down and go over that line, but I don't think that's even going to be threatened. Upside continues if we're just looking at where our fibs are coming in. First one is 3507. The second one for this minute wave 3, right? Consider 1, 2, 3, 4. We've got a fifth wave coming up on a minuet to finish the minute third, and our resistance levels are 3507 to 3630. In between, we do have a minor degree level at 3592, but that would be minor 3, and we're just getting ready to finish or get up, but possibly to finish minute 3. So I think it just remains as a resistance area. It's fib resistance. It might come into play before we get to 36, but I think it's not going to be the top of that minor third wave. We still have too many down and still stronger rallies to go. So again, we'd be looking there. And then let me go out to here, and then you can see that minute 3, goes there, but then I want to find where my next levels are. So you see we have a lot resistance zones up, really up in the 4,000 level. I'm not saying that that's going to go there next week, next month, within the next 3 months, but those are resistance levels that I think gold will eventually be moving up into. Over the long term, again, I just want to say that what I got going on is we're going to go to a weekly, but I'm going to go to a 20-year weekly. we're still within a larger rally phase of putting 5 waves up. So on an intermediate degree, we are 2 degrees away from reaching intermediate wave 3. So we still have to finish this 4th wave if it's not done on a minuet level, put a minuet wave 5 up to complete minute wave 3, do a minute 4, a minute wave 5 to finish minor wave 3. And then, those are going to be up around 38, possibly. And so again, the upside potential really remains. What I can't determine, and we could put Fibonacci time sequences out there, is to how long this is going to take. If I'm looking at how long the intermediate third wave has been in play, it's 10 years. Well, it'll be 10 years in December. But we're into May. So 9 years, almost 9 years, 6 months. That's a long time that this has all been underway. And we have protracted longer periods, right? So that's the other thing that we need to keep in mind, that as we get these, dare I say, higher degrees, but the minute, we see that we're going to be confronting with everything in between the minuet. It's been short in time frame. Then we have the November of 2023 to, well, wait a minute, that wasn't right. May to September. So June, July, August, 4 months for wave 2. This particular 4th wave, we have it here, and that is November of 2023 to, it's 4 months. So this could play up in this area realistically for a while. I mean, we topped and on April 21st. And so we've really only been into this thing for a couple of weeks. Now, could be over and we rally again. Or we work sideways to slightly lower. Now, how do you want to trade this? If you're just a plain futures trader, well, either you're going to have to sit through, or you look for something that you could put underneath if you want to hold on to your long. And if you're in the long for quite some time, then you might want to, you can think about taking profit, catch it again on the way down. Or if you just want to hold the long, then you need to put some protection underneath so that you're going to earn money out of one vehicle as the other kind of corrects. And that would be using options. So, but there are several ways, and I don't make any recommendations either way. I'm just saying that I think that this particular pullback could take several more weeks before it's done. But as I said, there's a possibility that it's not. But for me, I'm looking like this could be A, B, and we got a C wave. So if that's the case, you want to put in your fibs as such. And again, because it's minuet, I'm going to put it into that color because that's really what it is. Even though it's an AB, we're still going to be doing the C wave. And actually the C wave would be in that color. And we're going to be pulling it down to look 618 to 1.618. Yeah, I'll leave that up there just in case. I don't think that's what's going to happen, but just in case something were to push gold lower. All right, let's put it like there. So we have 32.49, 31.42, and 39.42, 31.42 is where we see where wave C would be equal to wave A if indeed this is AB and we're looking for that C wave down. They would be equal at 31.42. Still not that bad. In terms of the whole rally, not that bad. But then we have 29.69 if it goes full board down to 1.618, which would be our next fib level. So most common, second most common, least common. So I know it's kind of backwards, but that's kind of the way it's set up. So here to here, and then they were pulling into that 382. So that actually fits. And that could take a while to get there, or it's going to be real fast. That's the thing about gold. It either is going to go slower and work its way down there and have those strong rallies in between, or it's just going to come down, finish, and go. So, but longer term, we still have additional upside to do, and we're still looking. As far as I'm going to go right now is up to here, 36. And then as it continues to move, by the way, we will be able to fill in these gaps with even more resistance levels that'll start finishing these other levels as we go up. Like once this is done, I can put it in and we can see, because we're going to take wave 1 to put at the bottom of wave 4 to see where wave 5 is going to come in. And then we'll just keep tracking it all the way up. But I am expecting additional highs. And I think even for minute 3, we are looking for 35 to 36. 3507, 3630. That's our resistance cluster that I think could finish minute wave 3. All right, let's go over and take a look at silver. And again, I want to bring it out to my maximum so we can take a look that way. Silver still, this is an X wave. That is the W. So it includes actually the high in 1980. Then we drifted all the way back down and came all the way back up. This is 2011, and that completed the W wave. This is the X wave, and now we're in a Y wave. So we're looking for this rally to continue. And we have levels here, 39, almost 40, 42, 65, and 46, almost 47. So I'm not necessarily looking for new highs, above 50 not, and this is actually 49. So I'm not necessarily looking for them. That doesn't mean they can't happen, because if something lights and triggers under silver, then it should rally with some strength. But right now, you can see we're inside a minor fifth wave up accordingly. And within that, I'll bring it down just a second. So we're in an intermediate C wave, which will consist of 5 waves of minor degree, and we're in minor 5. So I think we are heading up to cap off this C wave and the Y wave. And then after that, we'll see what presents itself. So there is the Y, and this is the stem. So I'm still thinking that we're in this Y wave going up, and it's a C wave, and these are the projections. Now, bringing it down out of this big picture, let's take it down to the daily. There's the 4. I think we finished minute wave 1 of minor wave 5. So if that's the case, then here again, we have maybe A, B, and we're going to come down in a C wave, and that comes in right here, like wave 2 projections, 382, 50%, 618. I have a double up here at about 3170. I'm going to call it 3175, 70 to 75. And that is where the C wave would equal the A wave. And it's a 50% retracement for wave 2, which is very common. So I'm thinking if we're going to come back down, we can get back down to 3175-ish, 70 to 75. If we continue lower in a second wave, which is capable, we have additional support at 3120. And then for a full down slot within the C wave, we have 3063, 64 up in that area. It would not be unusual for a second wave. It would not be unusual for silver. It seems to correct really quick. So again, but I am looking for at least a bottom process for wave 2, minute wave 2, and then we begin to rally again. Once I have that low for wave 2, I can put in some fib levels that would coincide with the third wave. Now, bringing it back out there, I'll go back out to this weekly. One more. So bringing it back out, I continue to have, for the minor fifth wave, minor 5 would be equal to minor wave 1 at 3660, I'll call it. That would be one level. But I think that that is going to have some pretty strong underlying support. So the C wave begins to find some resistance at 39.98. So let's say 40 to 42. And then this minor fifth wave will have 1.618, which is first most common is equality, which is right there. Next most is 1.618, which brings it up to that 42 level. So I think the potential for it to get up there exists. The fibs are sitting there waiting, but it'll be completing. So while gold continues to make new highs, I'm not really looking for silver to do the same thing, not just yet. So again, there are always that potential where something will ignite underneath silver and it'll pop and it'll go. It's in the past, we've seen that occur. Again, one more time, going out to here, we've seen it happen where here the market went from 37 to 49 in a month. So could it do it again? Yeah. We could say 37 to 46 or 37 to 49. It could do it again. And it can, and whatever lit it there can light it here. So the same thing could occur again. And then again, we have the fibs that coincide. We have all the way up to 47. So again, not necessarily looking for a new high, but can't say for 100% certainty. If it gets above 49, then it's looking at 50. And that 50 has held since 1980. So new all-time highs in silver would be pretty incredible. And I think we will spike. We will just spike because what's going on with positions is, shorts are being forced to cover. All kinds of things are happening if we spike up that high. And then you can see what the response after. Bam. And I'm sure we probably get something similar here. In any case, right now, we're dealing with the market finishing up this particular correction, going back down to the daily. It's a wave 2. It's a minute wave 2. And then we're going to drop into a wave 3. And there's my target area that I'm initially thinking that we can come back down to, about 31.75, 70 to 75. And if that holds, along with we have the daily 200 sitting underneath at 31.65. So it's a nice zone that the market can get down to and hold for good reason, and then begin to rally in a third wave, which should be powerful. If this was wave 1, we'd be looking for it to double, pretty much double what we saw there, and with that same kind of strength, where we see silver just kind of put in a really nice rally for a third wave. All right, moving averages, not as impressive as I would want on a daily chart. 200, it is rising, but more just on a very slight slope. The 50 is going flat at the moment, along with the 20 and along with the 8. So we can just kind of sit in between in some difficult levels. So we need to see what's going to happen. If it slips, then those are going to slip with it. If it rises, these are going to should turn and resume their climb. All right, so finally, now let's go over and take a look at platinum. Platinum caught a strong bid. Now, again, bringing this out to what I can show you, we continue to look at that an ABC up is what we're working on. And there was an A, and it's going to be a primary B wave. Wherever this tops out, it'll be a primary B wave. Now, does that primary B wave suggest that we're going to get above the previous highs, which are, I think, 24? Not necessarily. Not necessarily. I mean, right here, we have where wave C would equal wave A at 1654. Now, that's pretty high, considering that we just kind of went up and tested over 1,000 last week. So again, what we had a nice A wave, and it actually did come in as an ABC. So here is a triangle pattern, which fit because it was an ABC. And now we're just looking for 5 waves up. If we get it based on that, our fibs are showing us that that's an area but we have all of these will come into play. But there we got a double. We have 0.618, which was B for that B wave on a primary degree. No, yeah, on a primary degree. So that fits. So intermediate wave C to finish that primary degree, 3 waves. And then we have down below, I want to bring it down because I want to take a look at what we got going on inside. So here we have inside. There is the triangle that was the B wave, and actually in wave E produced its own triangle. And there we have E of B. Now, breaking all the triangles would suggest we thrust up and out of the triangle. It's just taking longer, but we are moving more cleanly higher than lower. And Friday was a good day. We just kind of went zip. And so that to me was testing the 1,000 area. The high on Friday was 1,003. It did drop back, but not all that much. We closed above 1,000. And that's good for the rally. So if we continue that bid, here we have wave 2 would be complete. And what I'm leaving open now, right? I'm leaving open that we have this. This is A of 2, B of 2, and then C of 2. And if that's the case, if it's a big if, then we should find that support because this should be flat, and that's going to be right there, 959, down to 957. But we went a little bit above it, so I think we could stay a little bit above it if it comes back down into a flat, and then begin the rally. If this is all a part of the rally, and we have 1, 2, and we're now breaking into a 3 of 3 type move, then we have our first resistance at 1,017, which I think could be tested, but should be broken. And then we have our wave 3 would be equal to wave 1 at 1,055, which I think could present some resistance, but again, it should be broken as in a third wave. And then we're getting ready to break above that trend line or that border of the triangle. So we can find our first resistance, I think, 0.236, and that's on the intermediate degree at 1,078, 1,079. Now, wave 3, by the way, if it goes full bore, 1.618, 1,116, 17, up in there. Is it possible? I think we have good reason to rally. It is very possible. It is very possible. So again, ultimately, I think platinum can just truly go. I would think 14 is going to provide some stronger resistance, as will 15 and as will 16, simply because they're big, big round numbers. And it has spent such a very long period of time trading between 1,300 and 800. So, and then just kind of wedged its way. So breaking out of this should add some upside oomph to the rally. Moving averages, let's go down. I like looking at the daily. Let's go down and see what it does on the daily. Again, same thing. We have the 200 flat above us, the 8, which adds a little power to this. The 8 broke above the 200, which is a good thing. We can get a little bit of support from that break for upside move. The 20 now starting to head up, the 50 now heading up, but all of them need to get above this 200 to get this on a daily all in alignment for upside move. That would be a very strong positive for the markets to just continue. Okay, that's really it for the metals. The focus has been kind of more on gold, and silver and platinum are just kind of following up, but we need to just kind of, if you would do any research, you're going to look into this, you find out what the seasonal patterns, right, in May. You go back to this seasonal pattern in May, goes to here, and I have to go back here. Wow, I have to go back here into May, and it actually had a rally to mid-May, and then a big decline. So if this isn't to mid-May, up into here, then we could decline. So again, we're finding just a lot of areas where we can continue that seasonal type of a rally. Let me go out here again to this guy and see what I got going on. Out of February, we do have our seasonals, but nah, maybe they're not. But I would suspect that we're going to continue to rise. And May, in the beginning of May, on a cyclical basis and just a seasonal basis, platinum tends to rally. All right, that's going to be it. I'm going to get this taken care of and posted, and I will make every attempt to get access again. They're in there. I've seen them, my longer term charts, so they pull up when I request, so that I can make cleaner calls on what we're looking at. All right. So next update will be next week.